Hey guys, this is Eric Pikarsky with Infinite Prosperity Live Trader, and here's a little snippet from my Live Trader recap video from the week of June 27 to July 1st, 2016. This is my favorite trade and it's my biggest trade from that week. I posted it on Snapchat and then a lot of people asked me to repost it, so here it is. Let's have a look. Dollar CAD short hyper trade on Tuesday, June 28th and closed for profit for just over 3% on Wednesday, June 29th. So this is a very interesting move based purely on intraday price action patterns and candlestick formation. I usually take the daily and the higher time frames into consideration, but not in this case. This move happened right after Brexit. So Brexit was on Thursday and Friday, and it caused this massive move on pretty much all the dollar pairs and all the pound pairs and even all the euro pairs. And therefore, I was keeping an eye out for a retracement midweek. And I noticed a very interesting pattern develop pretty much on all the dollar pairs and all the pound pairs early Tuesday, late Monday, early Tuesday. And the pattern was this rising wedge that you guys can see here on this 1 hour chart. So as price exploded here on Friday, it pulled back also on Friday, but this explosion gave us a bullish trend change. It gave us a higher high, then a pullback. It gave us this higher low, and then it continued to go up on Friday. So overall, on Thursday and Friday, price exploded up, broke the previous highs here on the 1 hour chart, gave us a strong higher high, and then it retraced also on Friday to give us a higher low, and then continued to go up. After Friday, on Monday, the momentum here continued, and it gapped up on market open here on Monday, continued to go up, made another higher high, another higher low, another higher high. But as it was making these higher highs and higher lows, it was being squeezed within a rising wedge price action pattern, which is actually a bearish reversal pattern. The reason why a rising wedge is a bearish reversal pattern is because there's no more bullish momentum left. You see how price exploded here on Friday, made a strong move, then a strong retracement, and then this move over here wasn't that big. It pretty much almost failed to make a higher high. It made a higher high, but a very weak higher high. Then I had a slight pullback. You notice how this pullback was nice and big. This pullback was smaller. Then this bullish run was even smaller than this bullish run. And it gave another weaker high. So overall, the momentum here is dying to the upside. And when you see a price action pattern like that, it is safe to say that we will witness a pullback at some point. So as this was happening on all the dollar pairs and all the pound pairs, it was safe to say that after this massive explosion on Friday, the market was now overextended and needed a pullback. So that was something that I was keeping an eye out for throughout Tuesday and Wednesday. At the same time, as we had this 1 hour rising wedge, we also had bearish MACD divergence on the 1 hour chart, which also means that a trend change should happen at some point. On the 4 hour chart, 4 hour chart was interesting as well. So as we had this rising wedge on the 1 hour chart, the 4 hour chart was actually within this little channel here. It was giving us a flag pattern. So it exploded here on Friday, and then it started to slowly kind of chop upwards, forming a flag. Then it crashed down on Tuesday, on June 28th, and then it retraced to reject the bottom of that flag. Breakdown, lower low, previous low, lower low, pullback, rejection of the flag, forming a high test reversal candlestick pattern. So breakout, retest. Really nice. So it's pretty much confirming what's happening here on the 1 hour chart, which is also that rising wedge, bearish MACD. Breakdown gave us a lower low here on Tuesday, previous low, lower low, and then a pullback. So as the 4 hour chart was rejecting the bottom of that flag pattern, it was forming, the 4 hour chart was also forming that high test candle. On the 1 hour chart, let's zoom in. The 1 hour chart gave us a tweezer top candlestick pattern, which is probably the best candlestick pattern that you can get. What it also gave us was a head and shoulder pattern. So left shoulder, pull back to neckline, head, pull back, right shoulder, left shoulder, right shoulder. So now we have a rising wedge, we have a flag pattern on the 4 hour chart, we have a breakdown which gives us a lower low. This lower low is the first sign of a potential trend change, and then we have a pullback, which was retesting the bottom of that flag pattern on the 4 hour chart, and it gave us a head and shoulder pattern with a tweezer top here on the 1 hour chart. Beautiful. As soon as I noticed this, I executed the trade short on the 5-minute chart, It was also breaking this 1 hour phase line, which added to that confluence factors. And this is actually my favorite type of head and shoulder patterns. So there are 3 different types of head and shoulder patterns. I talk about them in a Live Trader mini lesson. This is my favorite one because the neckline is slanted. Usually with a head and shoulder pattern, you have a horizontal neckline, which does not give you a lower low. It's just pretty much neutral. It gives you actually a double bottom. With a normal head and shoulder pattern, when you get this lower high, this is your first sign of a potential trend change. With this kind of pattern, when you have a slanted neckline and you have a lower low prior to the right shoulder, this lower low is actually your first sign of bearish momentum coming in. It's your first sign of a potential trend change. And then when you get this lower high, that is your confirmation. So that's why this kind of head and shoulder pattern is my favorite. So after this tweezer top, we witness a breakdown here on the 5-minute chart. Let's zoom in. 5-minute chart started to break down the 5-minute 50 EMA right after the tweezer tops. The entry happened here at 17:30 GMT, which was exactly 30 minutes prior to the close of this 4-hour high test. And now everything was perfect. So let's summarize. What we have here is on the 4-hour chart, a flag pattern, breakdown, retest with a high test candle. On the 1-hour chart, we have a rising wedge price action pattern, breakdown, lower low, pull back to form a right shoulder and a head and shoulder pattern with a tweezer top, candlestick reversal, and a break of a phase line with bearish MACD divergence. And on the 5-minute chart, we have the entry, break of the 5-minute 50 EMA. So the stop here was 40 pips, just above the recent highs here, just above the tweezers and just above the high test on the 4-hour chart. And the target was the 4-hour 50 EMA. What we also had in this area was the 4-hour and daily 0.32 Fibonacci retracement. We also had the 1-hour slanted neckline. So connect the lows here of this neckline, and that's lined up perfectly with the 4-hour 50 with 0.32 on the 4-hour chart. And this was also actually the daily 50 EMA as well. So a lot of support in that general region. It's just common sense to place your target in that area. So that's exactly what I did. Target was 125 pips, and that gave me 40 pip stop, 125 pip target for just over 3%. So there you have it, guys. This is a simple pattern to me, but it could seem a little bit more advanced to other people. But this trade is purely based on intraday price action patterns and candlestick formations, and it is my favorite and biggest trade of the week. So there you have it, guys. This is Dollar Cat Short Hyper Trade on Tuesday, June 28, closed for just over 3% on Wednesday, June 29. And that is it. So I hope you guys enjoyed this short analysis, and I'll chat to you guys next time. Take care.